It's Monday, the 14th of November, 2011. And in this Boardroom Talk special podcast, Richard Friedland, who's the chief executive of Netcare, joins us. After a year, Richard, which is becoming commonplace, I suppose, South Africa doing well, the UK doing not so well. And as a result, put the two together, and it's actually not a bad year with the locals being able to pick up the slack from offshore.
Yeah, absolutely right. Thank you very much for Alec. We've had a very tough year in the United Kingdom. Tough trading, a very deep recession there, but very, very strong performance in South Africa. Our lowest debt levels ever, excellent cash generation, and strong operating leverage. So very good performance here in South Africa.
Let's get this tough stuff over first. The UK, we know, is going through economic difficulties. Why does that have a direct impact on General Hospital Group, your offshore subsidiary?
Well, we've seen a change in business mix. As you'll know, we're seeing more and more NHS work. It's coming to us at a lower price and a lower margin. We increased the amount of government work by some 23% this year, and it's about 24% of all the work we do. Now, when we first acquired this network in 2006, Alec, we were only doing 2 or 3%. And our core business, private medical insurance or medical aid, has fallen off. This year, membership in PMI fell by some 4.5%. It was 4.5% down the previous year, and really a reflection of the deep cuts in employment and the recession in the UK. So whilst we're seeing self-pay come back as people are on long waiting lists and want to have their hips and knees replaced, we were certainly hit by private medical insurance declining.
That's so interesting. So in an economic downturn, even something like medical or health gets affected in some quite significant swings in the product mix.
Well, I think there is always an alternative in the United Kingdom in the sense that people can always rely on the NHS. The difficulty now is that the NHS is not growing and expanding its budget by the 7 to 8% compound growth it did for the last 5 years. It's under huge financial pressure. Sir David Nicholson has issued something known as the Nicholson Challenge. He said to the NHS, we've got to find 5 billion of savings per year for the next 4 years. So they're not doing operations, and people continue to get sick. So this is an unmet demand that is rising, and people will need to be treated into the future. So short term, yes, people are being affected. And on PMI, because the job losses have occurred among so-called higher income earners, white-collar workers in the City of London, it's certainly impacted.
Are you finding that the government or the National Health Service in the UK is taking longer to pay?
This year, for the first time, we have had outstanding working capital and very good results in our collections from government, and you'll notice that we have some £130 million sitting on our books at the end of September. So generally they do tend to take longer to pay, but fortunately this year we've managed to get our working capital in order.
But the interesting thing as far as GHG or your UK operations are concerned is that you are paying off the debt progressively. You are, if you like, the longer that you have that operation there, the cheaper it becomes on the balance sheet, because I suppose you're just going ahead, aren't you?
Yes, Alec, and I think if you look at it without the currency translation this year, in real terms, we paid down some £90 million of debt this year. That's a lot of debt. Now, arguably, we have a large amount of debt for repayment in 2013 looming. That's on our property portfolio. But we are looking at a number of considerations, and I think paradoxically and somewhat perversely, given where Europe is and where a lot of the banks find themselves, we're actually having very sensible discussions with the banks as opposed to having a gun put to our heads.
Here at home, the numbers are very strong. Again, it's sufficient to give you a pretty respectable bottom line for the group as a whole.
Yes, fortunately, we've shown very strong operating leverage. Our revenues have been modest. We've purposely cut down on some of the high-risk primary care work, but you'll see that the margins have improved in our hospitals due to efficiencies. And generally, South Africa has had an outstanding result, both from an operating point of view. Our cash flows, we converted 116% of our operating cash, we converted, which is an outstanding result. And our debt is at the lowest it's been for 5 years.
What about national health insurance in South Africa? You've obviously done your numbers now and been able to think about how this is going to impact.
I'm glad you've asked that question, Alec, because when you look at Netcare, and we showed it in one of the slides today, we see ourselves answering that clarion call and being part of the national agenda. So whether it is in job creation, and we've created over 2,500 jobs in the last 2 or 3 years, or skills training, and we've trained some 8,300 people, or diminishing the wage gap, we've had a 15.4% increase in our low-income earners, and we pay the highest rates in the private healthcare industry. We think that closing this gap between the haves and have-nots and providing equitable healthcare is absolutely critical. And so we welcome NHI. We are benchmarking all of our hospitals against the department's core standards. And I think, Alec, if you look to our most exciting project, which is our PPP in Lesotho, it's the largest public-private partnership in Africa, I think that will inform the NHI debate. Finally, the private sector is putting its money where its mouth is. We're responsible for outcomes. We have to beat the Millennium Development Goals with regard to infant mortality and maternal mortality and the scourge of HIV and TB. And we're responsible for outcomes. We're responsible for employing doctors, for training nurses. And I think that that will be a landmark project that will be able to demonstrate that we can deliver outstanding healthcare in the public arena.
That has been one that we've been watching very carefully, I think, not just from the hospital sector, but for the country as a whole, because after a great start, public-private partnerships seem to have got a bit of bad press within the ANC, within the ruling party recently.
Well, I think that the public-private partnerships as they coexist in South Africa are archaic. We purely provide facilities, we improve the facilities, and we provide some non-medical services. The partnership we have in Lesotho is that we're actually responsible for delivering, at the same cost as government, these services. And in Lesotho, a nation of some 2 million, we've now put in the first MRI, the first ICUs, the first ventilators, the first level 1 trauma, first audiology and ophthalmology department, and a whole range of issues. And in a sense, we're decontainerizing the idea of public health. You don't have to deliver public health in a cheap building or in an old shipping container. You can deliver it in a state-of-the-art building. And if you look at our hospitals and primary care facilities, they're better than anything we've got in South Africa, including within the private sector in Netcare. And I'm hoping that we can demonstrate through this a sustainable delivery of healthcare. We've certainly got other governments interested. And I think it's a sad irony that one of the poorest countries in Africa will be showing its fellow SADC members and indeed the rest of the continent how public health care might be delivered into the future.
What about other parts of the continent? I ask this because in Ghana recently, there's been a lot of coverage over the government's attitude there of getting increasingly involved in public-private partnership. This would seem to be in their sweet spot.
Yes, I think it is for many governments, and I think the strength of the leadership in Lesotho and the stewardship has allowed this partnership because it is controversial. They are in many ways outsourcing a large part of their healthcare delivery, but they have the IFC and the World Bank as their partners, and I think it's important to have robust partners to ensure that the private sector, and in this case ourselves and we're only 40%, but our empowerment partners, Tsepong, are held entirely accountable for the outcomes. And whilst our capital investment is not as large as it might be for other hospitals in South Africa, from a reputation point of view, this is our most important project.
So if it works, it can be a model.
I think, Alec, if this works, we'd like to build 6 or 7 of these on the continent, and we think that this is the future of healthcare delivery. It removes this divide between public and private. The only difference here is a low-cost airline model. You fly business class, and so you sit in a bigger chair, and you have a private room, and you have better menu choice. But we're all in the same hospital, read the same aircraft. We all have the same pilot, read the same surgeon. We all end up in London, read the same clinical outcome. Yes, we may be in a general ward versus a private room. And that's the way public and private should be delivered. There should be no difference in the clinical outcome, the type of quality of services delivered, or the surgeon or nursing staff that's looking after you.
Fascinating insights. Richard, just to look from a shareholder's perspective, because this hasn't been a bad year, headline earnings per share up by 21%. Are you expecting that you'll be able to repeat this performance next year? I say that in the context that you've have benefited from a reduction in the tax rate in the UK and the release of some deferred tax income.
Yeah, I think this is going to be a hard result to beat, and our earnings guidance at the end, and I know I'm always accused of being far too conservative, but we're expecting a very tough year in the United Kingdom and a further decline in the private medical insurance industry sector. I think in South Africa we are looking towards some very good growth. You'll see we're bringing on some 477 beds in the next 2 years, some 200 of those next year. So I think South Africa will continue to perform well, but we do expect a very tough year in the UK, so I'd be surprised if we could repeat this performance, Alec.
But you are looking for growth overall?
Oh yes, certainly growth in South Africa and looking to stabilise our margins in the UK.
Richard Friedland is the Chief Executive of Netcare.